Crude oil has started the week with a gap up as you expected in our weekly review that a bullish closing might lead to a gap up and achieving 79.2. We have seen it reversing and traded bearish throughout the day. We have now seen oil at 77.5, a greater support. While net gas has given a gap down and it has achieved the lows from the previous week at 2.11 precisely at the same level. So now what to expect from oil and gas? How to profit, what are the key levels, what are the supports and resistance, everything we're gonna see with the help of charts and indicators. First oil, followed with gas. Watch till the end. If you're new to the channel, subscribe to the channel to get the latest updates. Do like, share and comment as well. And yes, join the channel memberships in order to enjoy the additional benefits. Let's start. First we'll look into oil, followed with gas. Watch till the end. See, oil on the hourly charts, rise, retracement, and see, certainly the momentum on the upside has increased. Yes, if you see it is staying above 78.6, we can initiate a buying entry again. Expect it to move towards 79.2 and then $80 levels it might try to achieve. Yes, rise retracement is still staying bullish. Stochastic rising after the drop. MACD has seen a crossover. It is trading with divergence and bearishness. It can continue to trade with slight bearishness. Be watchful of this. RSI flat. Coming to 2-hour chart. Similar is the observation. The rise, the retracement towards the 20 period, the rise, the retracement towards the 20 period. Now 20 period moving average have become a good support and it is continuing to diverge more from the 20 period moving average. And yes, once you see it staying above 78.6, certainly we can expect that it is trying to reverse and more rise can be seen. The stochastic has hit a bottom trying to bounce back. MACD crossing over here at the top, trading with very little divergence. And yes, oil since last few days has been always trying to on MACD from these levels. Thus, we need to be watchful at these levels that it can try to trade with slight bearishness from the current levels. RSI looking downwards. Coming to 3 hour, look at 3-hour chart. Yes, a stronger drop and achieving the lows, achieving the support at 77.5. We have seen it reversing. Now remember, the consolidation zone here at 77.5, 76.5 is going to remain a greater support for oil as of now. Yes, it is still trading bullish. It is still looking upwards. Stochastic has dropped a bit. MACD, see, MACD also replicating the same, but it is not yet crossed over. A crossover is what I will wait for because it has already achieved slightly higher levels. A possible crossover is where bearishness might be seen. Right now, there is no sign of bearishness. Thus, we have to wait for on the downside to break below 77.5, where we can expect it to move towards 77.2, 77 as the first support and 76.5. This complete zone between 76.5 and 77.5 is a greater support for oil here. RSI looking down, it has come out of the overbought zone. Coming to 4-hour, look at 4-hour chart, see double top here. With that, we have seen bearishness. It is trying to close the candle on a doji. Possibility of the next candle to trade bearish exists, but remember, it has got very good support here in this zone. We have to be careful around these levels. Yes, too much of divergence from the 20 period calling for it to converge, and that is why we can see it retracing. And that is why I say as long as 76.5 levels are not taken, we should not be treating oil for a reversal. Below 76.5 is where slight bearishness can be seen. The possibility of a slight bearishness on the coming candle exists only and only if you see oil is staying beyond 78.6 is where we can confirm that a rise is on the cards, and you can again expect it to move towards 79.2, 79.6 plus levels. The stochastic looking downwards. MACD has seen good bullish momentum and it is seen in elevated levels trying to converge here. A crossover here can lead to bearish momentum. RSI looking downwards. It has come out of the overbought zone. Coming to daily. And before we look into daily charts, if you want to learn this art of trading, be a part of my 28th mentorship batch commencing today. Reach out to me for more details or visit my platform forexfunda.com for better understanding of the services. And yes, if you want to just trade as per the signals, you can be part of my signals channel on Telegram. Reach out to me again on Telegram or email. And within the platform forexfunda.com, where you get live charts, the economic calendar, the community of traders, and you can book a call with me if you need any consultation or guidance. All the links are shared in the channel and video description. Coming to the daily, on the daily charts, one thing to note that the candle has started on a flat note. Earlier in the day, we have seen it achieving the highs. Now, see, if you look at lower lows are seen and it is still getting the respect at 77.5, 77.3 zone. Thus, first of all, yes, if you You can sell here at 78 as well, but then we have to be careful at 77.5, 77.3. See, on the downside, as we have seen, 76.5, 77.5 is a consolidation as a support zone. We have to be careful around those levels. And if you see it, staying below 76 is where the bears will take over. Look at the daily chart. The moving averages have crossed over 20 and 50 period. This is sign of bullishness. Also, one must notice prices are staying divergent from the moving average. It could try to converge a bit, but one must notice, I have been sharing this again and again, rise, retracement, higher lows, and after consolidation, oil has given a breakout, achieving the highs here. Second point here is the zone here at $80 levels. We have seen it in the last three times. It is giving it a very stronger resistance on the upside. Oil has to stay above $80 levels in order to confirm the bullish reversal. Thus, as long as it stays below 80, we should not be treating. We should wait for it to rather break beyond 18 in order to confirm stronger bullish momentum here. Now, one must notice that the day has started flat. Thus, a break beyond 78.6 can take it till towards 79, 79.2, creating lower highs. It can continue to yield lower lows as well. Be watchful here. Thus, buy at 78.6 levels, wait for it to break beyond 79, 79.2, and after that, certainly we are looking forward to 79.8, 80 zone. On the downside, sell at 78 itself, but then be cautious of 77.5, 77.3 zone, first support zone, below which we are going to look forward to 76.5 and 76 levels. In fact, every half a dollar you will find the support 77, 76.5, 76. And as long as 76.5 is there, the chances of a bounce back will be very, very high. Below 76.5, the bearishness is going to increase gradually. Thus, you need to take your positions accordingly. Do like, share, subscribe, and comment. Now, let's have a look at natural gas. See, nat gas is given a gap down opening today. Since then, we have seen it trading bearish, staying below 2.15, hitting the low at 2.11, and again now looking downwards. 2.11, 2.1 zone, you should watch out for. Very strong support exists here. Last week also we have seen it bouncing back from those levels, 2.11 specifically. Thus, one can initiate a selling position if you see it is staying below 2.1 levels. Right now, it is trading bearish. Stochastic looking down, MACD almost flat, and it has hit a bottom. It is not willing to trade with divergence and not willing to stay bullish. RSI looking down, trying to trade with slight bearishness. Coming to 2 hour, likewise on the 2 hour charts, the drop, retracement, the drop, the retracement, the drop. Now, notice here, see if you look at the last drop, you will find the support here at 2.1, 2.11 has become a stronger zone. Now we have to wait for it to stay below 2.1, 2.11 in order to confirm the bearish momentum. Also on the upside, we can notice that 2.15, 2.16 is the level beyond which we can consider it for a reversal towards 2.2 levels, which is a greater resistance. And after that, it will continue on the upside. Stochastic hitting the bottom, trying to reverse a bit. MACD is bearish. A convergent crossover here can lead to bullish momentum. RSI has dropped as well. Coming to 3 hour. On the 3 hour charts, consolidation, first bearish momentum, then this is the next candle and an increasing body size. Now, the coming candle, if you see it is staying below 2.1, then we can expect that it is trading bearish, else the possibility of a reversal is there. And when you can confirm it for a reversal, if it stays above 2.15, we can consider that it is trying to reverse. Then I will look forward to 2.2 levels. Stochastic looking downwards, MACD is divergent and bearish, RSI is looking down as well. Coming to 4 hour, likewise on the 4 hour charts, lower highs, lower lows, but still you will find the support at 2.1, 2.11 is what it needs to break in order to confirm the drop on the downside or bearishness. Stochastic hitting bottom, MACD again crossing over here for a sell, trying to diverge a bit. Yes, it is retraced and it is now looking downwards. RSI is looking down as well. Coming to daily charts, likewise on the daily charts, appears that it is hit at triple bottom levels and it is getting very strong support here at this zone. We have to be watchful of this, that is 2.11, 2.1, only below which we can expect it to trade bearish. Again, today it has given a gap down and a reversal confirmation. If you see it is staying beyond 2.15, we can expect it to move towards 2.2 and plus plus levels. Remember, triple bottom and a rise can lead to a stronger bullish momentum where it can try to move towards 2.4 and higher levels. If you notice the drop here, the retracement, the drop here, taking the support, if it bounces back, that should call for the bulls. Stochastic again looking downwards. MACD is divergent and bearish looking downwards. RSI is looking down as well. Considering this, a buying entry at 2.15, where we can expect it to move towards 2.18, 2.2 as the first resistance zone. If it stays above 2.2, certainly we can say now 2.3 to 2.4 can be expected very soon, if not today, possibly by tomorrow. And as long as it stays below 2.2, 2.3 zone, we can expect that prices are not reversed. On the downside, a selling entry at 2.1 can be taken, below which we can look forward to 2.08, 2.06. Remember, the last time 2.06 has provided a very strong support here. Thus, we have to be careful at around 2.06 levels on the downside. Take your positions accordingly below 2.06. This time 2.0605, if it breaks, we are looking forward to a sharper drop towards $2 and below levels. Remember, $2 is a very critical psychological level for gas to drop below. Be watchful of that. Like, share, subscribe and comment. Press the bell icon to get this live notifications. Have a great profitable trading day ahead. See you again tomorrow with the latest updates. Thank you. Have a great profitable trading day. Do join the mentorship batch. Do join the Signals channel.